Not everybody has these type of stores. We are in the middle of one where you you lean in and everything's going well, or you're not quite there yet, but you're keeping your pro rata and it doesn't work. You've had one of those, I imagine.
Oh, sure.
Yeah. So can you talk about it?
Oh yeah, absolutely.
Is it the delivery? Is it one of the delivery companies?
Oh, Shyp. Yeah, in the first fund.
Okay, so
yeah.
Shyp. So tell people tell people how to deal with that, because that's a real story. Like you gotta. Sometimes it doesn't work.
Sometimes it doesn't work.
Right. Yeah.
So beloved service, right? So the idea that whether you're a small business, an office, a consumer,
SHYP.
somebody should come to you. Should be able to basically press a button and say, I want to ship this somewhere, and everything else should just be taken care of. Like, and so they built. The founder, loves logistics, and I always think like loving a weird niche is always a competitive advantage. And launched an amazing service that felt like magic. Whether you were selling on eBay or you were, selling on Etsy or you were an office manager, like having to package people were even using it to like ship their bags. I'm going to New York. Let me just ship my bag. Or I'm in New York. I bought a bunch of stuff. I don't want to carry it back in the airplane. I'm going to press this button. Somebody comes to my hotel room, takes everything I bought, packages up, and it's waiting for me by the time I get back.
Right.
With a slight premium, but not, wasn't just a service for the 1%. Ended up launching in a handful of cities, and never quite got to the scale they needed, largely because the consumer business was high margin but low volume.
Didn't happen often.
Didn't happen often enough.
Got
it. As Kevin, the CEO, wrote, I think in his postmortem quite correctly, the fact that they had raised a bunch of money, I think $50 million, let's say, made them believe that they could
keep going.
Yeah, move gently off of the consumer business and ramp up the SMB, Shopify, so on and so forth, but not have to like rip the Band-Aid off and just, go and focus on what was actually going to be the business. Because when you have $50 million in the bank, the idea of, hey, we're going to spend $4.5 million this quarter to support, the consumer business seems like, well, that's less than 10% of cash on hand. It would be terrible for the brand if we stop, like blah, 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 blah. But then when you have $5 million left in the bank, you wish you would have had 10, And so that ultimately, went to zero for all intents and purposes. It went to zero, before the Plaid acquisition, before Chime was working, before,
early in your fund. Yeah.
Early in the fund. So we had Cruise, so we had one nice return, but you could essentially say, well, okay, now we have in a $35 million fund, we now have, let's say, a $3.5 million hole to dig out of. Let's say, I don't remember if we had $3.5 million.
It was a big bet. It was a big
bet. We had put into the seed, the A, and the B.
That's what I remember. Okay.
And when Satya and I looked back at it, we said, to be honest, like, let's look at this with actual intellectual honesty. The mistake was the B. The B was at a high price, big round, but we got greedy.
Okay.
We're like, this
wasn't ready for a B. You think like the data wasn't there?
I think at the time, anything that smelled like could be Uber for X, whether it was parking your car, whether it was shipping something, whether it was meal delivery, a lot of. For us,
dog walking, WAG.
Yeah, dog walking, a lot of companies. And it doesn't mean that there won't be, doesn't mean that there's not a DoorDash. It doesn't mean there's not a this, but there was a lot of venture capital that got, spent, subsidizing, interesting businesses in that year. And I think if you look back, I say we feel 100% good about the seed and the A. It's the B that we got greedy on. Mm-hmm. I tell you, the thing that and I don't know how you deal with this, Roger. Maybe the way you invest, you don't think quite as much about like conflicts, but because we sign up, we take a board seat, like I have to think about, even if they're not directly competitive, I need to give this company a little bit of room to run, so on and so forth. The investment in Shyp caused us to say no to 2 other logistics related companies, not because it was a bake-off, but because we made the investment in Shyp first. And then when those other 2 companies pitched me, I had to say, look, I know it's not competitive and I know you're not worried about it, but like I need to stay focused. And both of those companies are doing great. And so what I think about more, and what's almost more painful for me, and when I think about
opportunity cost,
is the is the right, right sector, wrong company. I can't trade out of a position and into another one. So we occasionally will sometimes challenge ourselves and say, is this really the investment we want to make in this sector, or do we want to hold off a little bit more? Now you can always imagine that there's going to be a better company that walks in the door next week that you haven't heard of. So you can never make an investment if you want, but that's not what we're paid to do, right? But I think in the first fund, there probably was a little bit of learning about when you have conviction in the sector, maybe the first company that like makes your heart flutter, maybe that is or isn't the company you ultimately want to be in.